Hello traders and welcome to another technical analysis video brought to you by Orbex.com. You're now surfing the waves with Richard. What I wanted to do today is to follow up on my previously posted articles on two of them, the most important ones, which was one of them is this one is the USD getting stronger, published on the 13th of April 2018. Today is the 30th of April, 12:30 p.m. Eastern Standard Time. So I'm gonna jump into this article right here, and basically in this article I was on April 13. I was pointing out a possible rise in the US dollar according to these structures, and I'm gonna go on the charts later on, but basically the dollar index practically looked like this. I was expecting a limited downside and then shooting on the upside in order to possibly complete this minor scale pattern and corrective structure within minor 4 red. Yeah. So um, let me just jump on the charts here. Okay, this is the dollar index um, on the daily time frame. All right, and since here the dollar actually took off. Yeah. So let me just zoom in and we'll most probably you'll actually see that this view was posted right here, somewhere around here, where I was expecting that bullish move, and indeed the dollar actually took off, and multiple structures are possibly revealing at this time. Hence the reason why I decided to make this technical analysis video and provide you guys with more details in regards to my personal expectations right here. So anyhow, the dollar indeed delivered this bullish rally. Okay, so this basically translating into the analysis on the dollar itself posted back then on this is the USD getting stronger April 13th. um, Turned out to be true, turned out to be correct. So in this analysis, I was expecting, let's say for instance, I was looking for possible downside on the Euro USD, on the pound dollar, upside for the USD yen, upside for the USD Swiss, downside for NZD USD, downside for metals as well. The only one which surprised was silver. Because of the complication of the structure, it became much more complex than that. So it delivered a bullish move, but regardless of that, the structure still is still pointing as possibly valid. So anyhow, crude oil still needs some time right here, but it's actually developing. And I'm gonna jump on each chart right here to go on the technicals here to give you guys more details. Okay. Now my latest posted article was based my most recent article is on was published on 25th of April, 5 days ago, in which I'm basically pointing out a possible reversal of trend. I mean trend continuations. Let's say on a larger scale, for instance, on the Euro USD right here. Yeah, and from possibly towards this area right here to possibly shoot on the upside on a bullish fifth leg, and weakness, possible weakness of the US dollar. That's completing more, complex corrective patterns. In simple terms, corrective patterns completing, possibly completing, and the cycles continuing. So in this article, I'm actually pointing out dollar index on a bearish view right here. USD bullish, GBP USD bullish, USD yen bearish, gold possibly a bullish setup, and crude oil to be bearish medium term. So let me just jump on the charts right here, and on the dollar index on a daily chart, I can actually spot a possible shooting star candle, yeah, candle formation right here, and this pattern I've labeled it as a WXY in a triple free for minor 4. Okay, now moving closer, this is exactly how the structure looks, and if you obviously some of you clearly know me by now, but the point is that I was on top of each and every swing within this very, very complex structure. So right here I was looking on the upside, it occurred. Right here I was looking for a downside, it occurred. Right here I was looking for the upside again, downside again. Right here downside again. This is where I was wary because of the structure. The structure became much more complex than that. And then here obviously upside, downside again. Here upside, and we are up to date. Now, what's happening right here? In my personal opinion, I believe that we could possibly have a bearish divergence here on the dollar index, leaving us with, or leaving me with only the last leg on the upside. So I'm gonna zoom in even more right here, okay? And the way I'm labeling this is as a sorry, yeah, WXY, yeah, WX, and then AB going lower than the start of A, thus allowing the extension. 1, 2, extension in 3, 4, and then an overshoot for the final fifth leg in order for this pattern to complete the C subminuet, Y minuet, minute Y, and then the 4. So you can see that we have multiple degrees right here within this. So with the Fibonacci extensions, I've measured W with X and basically the lowest point within this correction, and I'm watching 161.8. The reaction is clearly seen right there. However, I drew this channel just for me to make sure that the analysis could be valid. Now, a break of this channel will obviously be very bearish, and any good technical analyst would look out for, let me just draw this correctly, would actually look out for a possible bear flag. Yeah, this would be a setup. And coming up, we do have important data this week, especially on Friday, which is obviously the NFP, the non-farm payroll jobs in the government sector in the United States. So, by the way, I'm also gonna host this live webinar. It's gonna be a live trading webinar indeed. If there will be suitable setups, then I could also be opening some trades live. But the analysis will be provided right there, and we're gonna together, if you join, we're gonna take a look at the structures, patterns, and how they look, how they unfold, how they unfolded. So anyhow, just read this video is just like a, let's say for instance, you can consider it as a preparation video with the expectations. So the main view is on the downside, obviously, and I've been hunting this possible bearish swing since February. Now, um, short straight to the point, what I would expect personally for the dollar index will be a squeeze on the upside, thus having a possible bearish divergence. And I'm gonna show you why, and I'm gonna move to the other pairs. Yeah, so let's say, for instance, on the metals, gold daily chart. I explained this before, I believe. I'm labeling this as a very, very complex corrective structure, especially this one in the middle, because it's correcting this swing, and this is also a corrective, this is also a corrective, hence the reason we have conflict of corrections and degrees. Yeah, so this leaving me to think that this is not, that this could possibly not be the entire pattern, and this in the middle is the correction for this, hence the reason why I believe that um, there could be one more swing down there, so we can actually complete this pattern, and then gold can really shoot on the upside with a move similar to this. Yeah, so according to the corrective structures, this corrective cycle may not be complete yet. Okay, but the way I'm labeling and analyzing this corrective piece right here as an intermediate B wave, which is basically this green B right here, following the A within this complete complex structure. So we have basically a W intermediate, X right here in a double flat complex corrective right here, and followed up by the last leg with a triangle inside here for the Y. Thus, we have primary W and then WX ABC, primary X, and then there we go on the upside A, B, C, Should this be correct, I would be very pleased with it. However, I'm um, I'm taking a look at the charts, of course. The way it looks, it could be valid. So this view was indeed posted already. Now the point is that a big wave would retrace 50% of A or 61.8, let's say for instance, but I would be satisfied with 50%. And the reason why I believe it would be 50% is the following ones. Notice that I have some trend lines right here on the breakout. So tested one time, two time, three times, four time it went to the second to the next level. One time, two times, third time went again. Tested again, it's tested again, broke out. So this leads me to think that the next level could be this trend line right here. Okay. Um, and if I even zoom in, yeah. By the way, let's say for instance on gold, right here, I was actually um, expecting this bullish move, which actually occurred right there, and even so somewhere around here, I believe. No, it was this one. Okay. Now zooming in. All right. Now, following up on that first view on April 13th, yeah, when I said that USD could um, get a little bit stronger, yeah, gold intraday, let's say for instance, swing down again, down. This is basically these are the posts. Now, as a counter, let's say as a counter analysis, it's somewhere around here, okay. Um, on the corrective piece, this view was posted right here for the upside, and then again after it finalized, posted again for the downside with some levels right here. So according to this wave count, should this wave count be correct on XAU USD on gold? Have an AB, yeah, as a corrective piece, and then 1, 2 extension in 3, 4 complex corrective right here. Okay, just because this move has free moves inside it, free swings. Hence the reason why I believe it could be a false breakout in the next, typical for wave X, and this could go with on the downside, yeah, towards this pivot 1304, 1295, even 1285. We'll see if it even goes there. Now moving on to silver. Same same view right here with an extension in 3, triangle in 4, and hence this, I mean, this could possibly be the last squeeze on the downside when the dollar could basically get its top. Now, crude oil on the daily time frame, I'm looking at this as a possible running or expanded flat type of structure within this B wave. So it could, sorry, all right. This could possibly be, I mean, developing. I posted analysis on this. It's on the Orbex blog. Setup is not yet clear. However, it it unfolded in a rising channel right here. Hence the reason why I believe that this could be the first leg and could be followed by another leg on the downside. So this is the daily chart. Now the let's say the 4-hour chart. After this triangle formation right here, I would be looking towards this 100% and to see if how it behaves. Yeah, I mean, for instance, either it breaks and forms a um, bear flag, yeah, bearish setup, or it decides to go one more on the upside, which basically I'm giving it the benefit of the doubt because of these Fibonacci extensions right there. So I will keep monitoring this. Now, as for Euro USD, this is the correction, the complex corrective structure within this fourth wave intermediate green, which developed as a WX complex WXY. Yeah. So I as you can actually see, this has this unfolded within a descending channel. So it could find its end, yeah. Now, and then of course to possibly deliver on the upside, which is this view posted most recently right here 5 days ago on the Euro USD. So since then it indeed it went lower as expected. Okay, um, and this was actually posted back then on this bearish view right here. Okay, so you guys can actually see what I've done here. Also on the counter basically right here for the limited upside. Okay, and again posted on the bearish side right here, and this 1 to 1.24140 worked out beautifully right here. Yeah, for this swing down. Now, real time, I would be looking at this as an extension in wave 3. So we'll see what type of structure this develops, or the wave 4, or if it decides to go until this fibs as an extension of A and B, W and X actually. But anyway, for the structure to be considered as complete, thus giving a possible bullish divergence right here. So yeah, the analysis is posted. So those of you who wish to get more details are actually there. Again, for the pound dollar, a view on the downside right here, which worked out beautifully. Yeah. Next, let's say still pound dollar. Yeah, for the view on the upside, which is posted right here, and as you can see, it's really testing this lower trend line of the ascending triangle. Should this go a little bit lower, it would be very dangerous for a pound dollar. However, I would be monitoring it because it could as well make an overshoot right here and then bounce, right? So we'll keep it in mind. The setup is actually posted right here. Okay, now moving on. USD yen, yeah. The daily chart is how I'm labeling this is as a very complex, a triple free structure um, within this corrective piece. Yeah, so we have W, X, Y, X, and then W, X, A, B, C. Yeah, some sort of W, X, A, B, C. But anyhow, it's a very complex structure. Yeah. So the the way I'm seeing this is as a corrective piece and possibly delivering one more on the downside. So let's say the 4-hour chart. Yeah, I'm labeling that swing as an A and then running flat in B and then 1, 2, 3, 4, possible 5 divergence, possible divergence right there, so it can actually squeeze on start on the downside. USD Swiss similar corrective piece right here with one structure in this, then another structure in this, yeah, X and then AB and the extension and the final squeeze for the overshoot, and I, we could possibly see a bearish divergence right here for this to possibly unfold. As we can see, the oscillator are, the lines are quite diverging right here with the price action. So um, it would be okay for this to turn out to be true, for the dollar to gain strength this week, and then possibly delivering this this swing, yeah, on the dollar index on the daily chart. Now, as a bonus, let's say for instance I want to follow up with that pound Swiss view, which was previously posted. It was posted somewhere around here. However, I followed up and um, basically at the end on the bearish divergence again, it unfolded. So we'll see how far this would end out. For now, bearish volumes are still here. Bears are possibly coming. So we'll see if this is indeed an extension, or worst case scenario could be a corrective piece for this, and there's further upside. So that remains to be seen, and then I will decide on this and recap a bit later on once the pattern could complete. So now, as a bonus, let's say for instance, I've noticed a similarity in the patterns in the European indices, One of them is I'm on it right now. It's DAX Germany 30 daily chart, and this is one of my personal favorites, to be honest with you. I'm studying the full cycle for this bull market. Let's say cycle waves, greens, 1, 2, and then with an extension in free right here, then I would see this as a possible wave for a cycle degree, and then further upside. And this is the trick. If this turns out to be true, I mean the move, let's say for instance, which I'm expecting, possibly expecting, move on the downside, last leg on the upside, this would complete multiple degrees, so which could translate into the cycle ending and possible bear market uh, upcoming, like, I mean coming up. So we'll see. But DAX is one of my favorites. Let's say for instance, on May 12, 2017, about, I mean almost 1 year ago, I think 1 year ago, yeah, I said that, I say according to this wave count and this analysis, etc., from 12,950 it could go to 12,000 and rising towards after that rising towards 13,400. Yeah, so clicking the, I mean loading the new bars right here, as you can see, 12,950, 12, then 12,000, then 13,400. Okay, and then it started fell. So even here I was, I mean around 12,000. Yeah, this is it. Yeah, from 12,000 to 13,400. Okay, again it went on the upside, and then started falling, right? So zooming in on that, on this view right here, yeah, I mean this swing. So the way I'm labeling it as a W, X, A, B, possible C, and then for this to possibly go on the upside. So um, the last move, um, um, this was also posted intraday wise. Let's say for instance on a smaller time frames from 11,900, where it's 12,650, 12,850, but we can actually see that the pivot 12,650 held. I mean, target was reached. Yeah, the projection was reached. So the way I'm seeing this squeeze is as a possible last move on the upside for DAX before the cycle, I mean the patterns to complete towards 11,600, 11,500. So we'll see what happens with this. If it goes in a five, it needs to go in a five-wave sequence because it's labeled as a C wave. So let's say 1, 2, 3, 4, and then the final squeeze on the overshoot for the wave fifth. Or if we do have an extension, if I do see an extension in this, we'll keep it in mind. But the similarity is also with the CAC 40, France 40, yeah, with this leg right here, yeah, and this corrective piece within an expanded flat. And with the Fibonacci extensions, I labeled this W with the X, leading me towards the 161.8. And as we can see, really wants to go there. Yeah, I mean, looks like it wants to go there. So I would be taking a look at this volume. So we have a possible bearish divergence right here. So again, we'll I mean, I will keep on monitoring this. So this is pretty much what I wanted to do today. I wanted to mostly make an update on this view right here. Yeah. So so this setup actually is based on let's say for instance on the dollar index possibly delivering a downtrend. I mean, starting a possible downtrend and completing the cycle, right? After which, obviously, I will see it quite bullish. But yeah, so the setup is basically for the dollar. I mean, dollar bearish, Euro USD bullish, pound dollar bullish, USD JPY bearish, medium term, gold bullish, medium term, yeah, and crude oil bearish, medium term. So that's about it for now. As I like to say to all my traders, until next time, stay in the green and many pips ahead.